Hi everyone, welcome back to the another episode of Market Update featuring by Market Soul and Rationale. The next couple of weeks could be quite eventful. On July 30, the FOMC will decide whether to cut interest rates or not. And just 2 days later, the US is set to impose reciprocal tariffs on imports from its major trading partners. At the same time, we're seeing like a mounting political pressure on the Fed. This morning, in the beginning of this week, Treasury Secretary Scott Bessent openly criticized the central bank in a CNBC interview, accusing it of fear mongering over a tariffs and questioning whether it's fulfilling its mission at all. He even took aim at Fed stuff, saying like all these PhDs over there, I don't know what they do kind of interview. So that rhetoric weighed on USD and gave a gold lift for sure. While the S&P 500, despite hitting another record high, we saw some intraday gains fade later in the day. It feels like market are pricing a no rate cuts next week, but expecting the Fed to open the door to cut in September, and for that to land smoothly, Powell might need to strike a more dovish tone, especially with two Trump appointed governors, Waller and sorry, I forgot the second name, ready to object to him. So let's now take a look at the key data from the last week and what was on the economic calendar. Let me quickly get there. So yeah, first of all, I would like to start with US PPI number. After the higher than previous CPI number, the market had started to worry a bit, if the inflation is coming back and stuff. But when you had looked to the details of that CPI number, that was not concerning though, that much, at least for me. But now with seeing a lower PPI numbers is ease the worries of the inflation. This data also supported the risk on environment and the rally in the risky assets that we're experiencing right now. Today, in 22nd of July, on Tuesday, I'm recording this video. A little bit a risk on, there's some profit taking activity going on currently in the markets, especially when you check the crypto market. But yeah, the general, the main trend is for sure up for risk on financial instruments. And when you go to the first, PPI number is important in terms of to see the producer price, as they're going to reflect to the consumer, consumer products, right? That's why we're tracking this in order to measure, in order to evaluate the current stance of the inflation. And when you go to the retail sales data, and you can see here the core retail sales data, the forecast was 0.3 and the actual number 0.5, and there's an increase there. And this retail sales forecast 0.1, the month over month data, and the previous number, as you can see here, to see higher than expected number, while it's indicating that economic activity is increasing. It's also kind of a signal that there's a demand. If there's a demand, then it might be reason for an inflation. But here, as the main worry is still on the economic growth side, on the decision of rate cuts, we're more focusing on the labor side, and this is a positive figure for the risk on sentiment for the equities, especially as it's suggesting that companies are still seems still solid on in terms of sales. In the so yeah, the 0.5 monthly increase in the control group also. Here the control group, as you can see, it is important because this control group, it feeds the GDP calculations, and when we see a higher than expected number here, that means GDP will come higher as well. At least it's an indication. That's why it's important. So it's also indicated positive number. When you go to the initial jobless claims, as you can see, the forecast was 233k, but the number is 231, which is lower than expected. That means the jobless claims are declining. That means there's still an open position, ample position in the market. that means companies still hiring, right? With that mentality, we can say that economic growth is still solid. So when you combine both all these three data, and they all suggest positive pricing for risky assets. And when you go to the Philadelphia Fed Manufacturing Index, as you can see here, it's also indicated in the same direction, that the forecast at minus 1.2, but the index came in 15.9. It's a significant improvement in the business outlook. So the overall outlook was suggesting that the US equities to move higher, USD to go higher, maybe because of that inflationist side, and to gold to go lower. But it didn't happen for the gold and USD side, because the rate cut pressure increased from the government side, as I mentioned in the beginning of the video, to the Fed, which pushed USD lower and precious metals higher. And another important development that happened in the beginning of this week, there's like a election in Japan, and Japanese voters delivered a clear message by stripping the ruling Liberal Democratic Party of its majority in the upper house. They're like a lower and upper house. With the LDP already out of the lower house, this losing the control in the upper house marked the first time since 1955 that Japan's long dominant party lost control of both chambers, both like upper and lower houses. Prime Minister Ishiba stated he would like be willing to continue. Markets were not caught kind of off guard. Yen strengthened modestly, while bond and equity markets remained closed until a Monday and Tuesday. Equity futures, when you go look at that, showed little immediate reaction. Long-term shifts in Japan's economy were becoming more visible. For example, a 30-year JGB rates are around 3%, which is first time higher than US. There's a yield differential between JGB and US. It's the first time in 20 years. Inflation had finally arrived in Japan, which was the main problem for their economy. And Japan's economic strength had also faded in dollar terms as well. The GDP per capita, once ahead of the US and Germany, diverged sharply after this Shinzo Abenomics period began in 2012 and weakened the yen. So yeah, that's the current situation, but the rate differential is still favoring Japanese yen strength, and I'll cover it in the chart section right now. In the chart section this week, I'll quickly go through few charts, for 3 or 4 charts. Then I just want to switch to the charts that I had mentioned in the previous week and show you how they acted quickly. First of all, I would like to start with the real yield chart. What is real yield? First of all, we need to define that, right? Real yield is US 10-year yields minus US 10-year inflation expectation. That gives you the real yields. When it comes down, you expect to see appreciation in gold, appreciation in US equities, or appreciation in some other instruments than fixed income instruments. Why? As the market participant couldn't find the compensation amount for their funds, they're seeking for new other opportunities, that's the general, I don't want to say rule, because sometimes I've seen a lot of times actually when the real yields are going up, the gold was going up as well, and vice versa. That happens, but that's how it works right now. And as you can see, when you just look at this a recent rally in the risk on market, for example, starting from mid-June, red bar, this weekly bars, and as you can see, the trend is coming lower. We see that rally started there in the a risk on assets. So euro dollar, as you might recall from previous videos, I had mentioned this cup with handle, breakout, pullback, and just you can see that this 50-day moving average, the blue line, and this horizontal previously the resistance, now is the support area, is acting pretty well, and we see some pullback. Then we might see the resumption of this price action as we see more dovish action from federal government in the upcoming days. And it's, I think, still offering some being long opportunity here. You can be long with the current price, or you can wait around here to be long again with I don't know, just below this 50-day moving average. That might be a sensible idea. Weekly, same here, same applies for the pound dollar. As you can see in the weekly chart, there was this cup with handle as well. As you can see, this cup handle movement, breakout, pulled back, resumption, pulling back again. If you just want to give one more shot to be long on this when you come to the daily chart, and if you want to play tight, you just can be long around here with a tight stop like this. Might be a sensible trade idea. Another one, the Japanese yen. So in the weekly chart, how I'm tracking the Japanese yen, considering the rate differentials, if we're expecting that the narrative will be shaped around this rate differential, we should expect the Japanese yen strength, right? So that's why I'm following the descending triangle chart pattern. And if we see some like a movement like this, first of all, if I see something like that, I can first start to build my short position in USD Japanese yen from here, just below this like long-term moving averages, which is these are like a 10-week moving average. I can be short around here. Sorry, let me open a short position around here, right? With a stop here by targeting this breakdown. And if we see a breakdown from here, then I can open this, I can add to this position, and that's how I can shape, that's how I can build a position in any instrument. So let me skip to the trade ideas that we had given in previous videos. For example, in this one, Euro Australian dollar, rectangle chart pattern, breakout, moved really well, pulled back. When you come to the daily chart, as you can see, also maybe in the 4-hour chart, it's much more visible. As you can see, this head and shoulder bottom chart pattern formed with the pullback price action. Then it managed to resume its weekly price action after breaking out this head and shoulder bottom chart pattern. So I had given this trade idea around there, and it's in profit right now. Another one is Euro New Zealand dollar. Same here. When you go to the weekly chart, same happened here. Breakout, pulled back, consolidation. Zoom into consolidation. Check it if there's there's a rectangle-ish chart pattern. And here with this pullback to the short-term moving averages was the first entry point for me. Then I had mentioned a second entry point in the breakout, and it's in profit right now. It's moving pretty well. Quickly, let me skip to EUROCAD. It didn't act yet, but in the monthly chart, as you can see, there's a huge ascending triangle chart pattern formed in Euro Canadian dollar. And if we see further weakness in oil prices, with the pressure from USD to come to OPEC plus countries to increase the supply, by that way they will be controlling the inflation. This might act as that might be a catalyst for this Euro Canadian dollar long trade idea. So New Zealand dollar, Swiss franc short. As you can see, this descending triangle chart pattern was the trade idea. I had given first here, then pulled back, and after that pullback here, you can see the consolidation again, and you could have entered this position here with a stop with this high, and it's moving pretty well right now. Let me quickly skip to cryptos and finalize the video. I'm following this cup with handle chart pattern. I had mentioned that I was mistaken in potential pullback to this long-term trend line in the Bitcoin. Maybe we can see later on, but at least I was expecting it to come here to consolidate more, but it didn't happen. But you know, I'm not guessing actually. If it acts like that, then I'm acting accordingly. So that's why then I switched my perspective to this cup with handle chart pattern, and a breakout was an opportunity, and pulling back right now, I think it's still offering this entry opportunity. And yeah, it's moving pretty strong right now. Solana, when you go to the weekly chart, I had mentioned this cup with handle potential formation, right? And when you go to the daily chart, if you're a member of Rationale newsletter service, you should have received this Solana trade idea in the beginning of this week. And here there's an ascending triangle chart pattern in the daily time frame. and there's a really nice breakout, we might see some profit taking activity, which would lead to some pullback, retracement, but I think it still offers like a positive pricing on Solana. Ripple, and this head and shoulder bottom chart pattern was the trade idea. Again, it was already sent to Rationale members that you can reach the link from in the below this video. This was another trade idea that I had mentioned in the previous weeks in this market update videos, plus Rationale newsletter service. Please subscribe to our YouTube channel in order to catch up with all these ideas, and plus please you can subscribe to Rationale newsletter service if you just want to keep updated on these trade ideas. So the head and shoulder bottom chart pattern price target has already it's almost there, right? But now I see when you go to the 4-hour chart, there's a bullish flag formation here is happening, and the potential price target for the Ripple in this flag is around $4. That's why I'm still positive on adding exposure in Ripple. Dogecoin, when you go to this daily chart, as you can see, there's a rectangle chart pattern. Again, this was sent in the Rationale newsletter this week. A breakout pullback, still offering this like a being long opportunity. You can be long here with a stop just below the previous day low of the breakout line, or it depends on your risk management mentality. You can also be you can also put your stop loss here or just below this level. And if you just want to act conservative, you can put if you're acting as an investor, and if you're okay to be it all depends on your risk management position sizing mentality. I highly recommend people to work on their position sizing or risk management mentalities rather than focusing a lot on finding correct entry points and trying to guess what the market will do, because it is impossible. But you can be long, you can increase your exposure in the instruments that goes higher, and it doesn't matter if you know like a 70% of your trades are if you say just a long and it doesn't matter. You just be heavily invested on those instruments in order to make money. That's the main mentality. That's why I highly recommend you to invest yourself for position sizing and risk management rules. And lastly, I want to close this video with the Binance Coin BNB chart. In the weekly chart, there's a huge let's say 4 years long this weekly chart rectangle chart pattern, or you can call this also cup with handle. Cup with handle is also just included in rectangles. That's why it's not something different. There's a base here, obvious base, and the breakout activity. There was a fake breakout here in the beginning of in the end of 2024. Now is attempting to break out again. I'm following this closely. This is really nice technically, and yeah, I think that's all I'm gonna talk this week. Thank you for your time. Thank you for your listening. I hope you find useful whatever you see in these videos, and now it will be so important for us if you can subscribe to our channel and just share these videos with your friends who are into investing. And you can also reach us through the links below the video, the Market Sol website link plus Rationale newsletter service. You can reach us through those links. And thank you for your time. I wish everyone a great week. Bye.